Hello everyone, great to see you all today, and welcome to the PivotBoss Monthly Market Outlook for April 2022. This is the first monthly market outlook here for Q2. So Q1 is now behind us, and we are now headed full on into Q2 here. We'll cover some of the higher time frame charts with regards to some of the major market averages like the ES, the NQ, YM, RTY, and we'll also cover commodities like crude oil, gold. We're going to take a look at Bitcoin and Ethereum and other crypto related markets that, if you're into crypto here, there are several that are very, very good here that we've identified entries for since the beginning of January. These markets have, for the most part, hit a lot of these levels and have already bounced. We'll revisit those and also identify new levels for some of these to keep an eye on. And we'll also take a look at stocks as well. We'll take a look at some industry groups that we talked about last time, some new groups here to keep an eye on. And then we'll also talk individual stocks. So we have a lot to get to today. If you're asking questions, feel free to do so inside Zoom or in the trading room here at our EchoFin trading room. Again, my name is Frank Ochoa, also known as PivotBoss. I wrote a book a while back called Secrets of a Pivot Boss. You can find us at pivotboss.com. Thank you very much for joining us here today. If you have any recommendations on any of the stocks that you'd like me to check out, please be sure to put that in the chat field there, and I'll check them out when I get to it. So let's go ahead and get started with the monthly market outlook for April 2022. The first thing we're going to take a look at is crude oil. So I'm going to bring this over here and take a look at crude oil. Obviously, when we initially began the first, well, I guess it was the Q3 or the third month of Q1 rather. That monthly outlook, we mentioned that the 96, the way 96 went bid, which was our market structure edge that day, suggests a major continuation higher. And that day we mentioned, could it go from 106 back to 146? And it got as high as the 130s here. 130.5 became the high. It's since made a tremendous pullback to that 93.53 level, in which case it then bounced back to 116 and back down, and here we are inside the range. So I would say right now, you know, a lot of the market headwinds that are facing the market, the broader market, are increasing commodity prices, including crude oil here. And I would say that the 95, 96 level is still the major level to watch there. If for at some point down the road we fail to hold that zone, it will open up a pullback toward the 86 market structure there. And again, that could ease up some headwinds here for the broader market to continue higher here. High oil prices here put a damper on things. You could see a major kind of compression pattern here, but for the most part, everything in March here is its own auction that is just unusual, and it's you know, tailor-made to that 1 month based on what we have going on at that time. Again, the geopolitical issues going on overseas, including the war in Ukraine. Again, that right there. Sending these prices much higher, and that right there is an indication of a market before that time and a market after that time, and that's the line in the sand. And you can clearly see the market structure there. You can see the price action is different, the volatility is different, and heading into it, it was, you know, we're in a bullish inflationary period where the inflationary period is so strong that commodities tend to push up. And then again, you have this that tends to lead to additional inflation of value of those prices. So right now you can see again, 95, 96, still that kind of zone here to watch. If we were to drop into that area, I would suspect a bounce back toward 115, 116 could still be in play as we trade in this area right here. So it's basically 95 up to about 105, 105 up to about 115. And that's the market structure to keep an eye on as of right now. You know, again, when we take a look at the larger weekly time frame, and we have to go out a bit more here if we really want to look at some of this here. If we go way back out, one thing you'll notice here is, again, going way back, this is a weekly chart, you have that 146 level. That's the level we referenced before. And you have basically the 113 level right here. So when we last left off, I mentioned if we get through 113, you basically have clear air all the way across this market structure, which has been rarely traded except for this one moment in time, which is quite a while ago. Every other time it's come shy of that level and pushed downward. We've made a tremendous move to get back to that level. So that's still 113, still the major level here overall. If there's a tendency to stay below it here pretty soon, and we are rejecting prices above that zone, then theoretically, again, 86 is down to about $80. Even down to the 76 zone could be in play as it trades back in this range. So I know it sounds crazy here to think of oil dropping that low when it's been in a tremendous up move here. But again, the market structure been very good to us here with regards to this one. And if there is a failure to hold 95, 96 here, it opens up the next spot down. 86 down to as low as 76 could be in play, and that could take us all the way back to break even on the year. So it would not surprise me, but as of right now, I would say any test into 95, 96 is an opportunity to buy it back to 115, 116. A failure to hold that edge here opens up a move that could take us all the way back to break even on the year, however briefly that may be. So that's crude oil right there. Now, taking a look at gold futures. As crude oil was rallying, so was gold here heading into the Ukraine war over there. And that led to a tremendous move higher. One thing we talked about was the compression of gold at that time, the compression of the PivotBoss bands at the time, based on the measurement we had at the time. And we had a huge breakout. The only thing here is the rejection has been significant. Again, this is a weekly time frame. Significant rejection here on a 1 week basis. A major sell signal, and it's right at R3 on the developing yearly bands here. This is right at prior highs, which is, again, the August 2020 highs are as strong as it gets at 2089.30. We had all this energy here, exploded to the upside, and still fell shy of that zone, getting 2078. So fell about 11 points shy of that zone, 10.5 points, and then pulling back. So right now, again, is this going to be a full-on failure where it rejects the upper edge and now we pull back to the midpoint of the range, dabble, and then drop back to the bottom of the range? Or is this an attempt here on this pullback to build some energy and see if it can force some expansion to the upside? Initially, the amount of energy built up in here, the amount of time spent compressing, suggested that we could see a multi-month rally. But with this major rejection up here, it's going to be interesting to see how we follow from there. So this one has been very bullish in the face of a defensive need. But again, finding some rejection here. So any failure to hold, really, the 1880 zone, somewhere in that zone, 1900 basically opens up a rotation back down, where we could see a rotation here across the range all the way here. I would say if that might be a low case instance. We may drop quickly and see a major rejection. If we see a major rejection on a push down, I think that would be tremendous here. Failed new low with an uptrending move here, that could open up a bit more upside. But right now, showing some weakness here off the upper end of the range. Okay, Now, taking a look here at something like the ES, this is where things are going to get interesting. Obviously, we've had a tremendous move here recently. Right here, this was a tremendous buying opportunity. It was an awesome rejection. Failed new low with an outside day, bullish outside day up. A 2-day continuation here, or at least a 1-day continuation from the previous day. So 2 strong days in a row. That is a day designed, or those are a couple of days designed to really push this thing higher, especially if some change of market structure occurs there. So it had a change of bias there and a nice transition back above. We got our levels up here last week and moved right into those target zones to the upside. And now we're left to wonder here, how do we proceed moving forward? This is the biggest rally that we've seen of the year, easily. But is it enough to... did it seal the low? Number one. And also, is it just a bear market rally? And as we've said from the very beginning, you know, each of these times, that bear market rallies tend to be the most bullish rallies. They rip your face off. They continue to squeeze, 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 squeeze. And then at the last moment, they give out and drop again. When you're in a normal trending bullish market, you tend to actually see, you know, a bit of a more lower volatility trend up. This was significant in how fast it went in 2 days. A week later, it was here, and then all of a sudden, you're at new highs. And you're just off the all-time highs that quickly. So is this a trap? You know, was this move here designed to get everybody in, and then at these highs it just gets crushed back to the mid of last month, or worse, all the way back to the lows of last month, or perhaps again the lows of the year? So right now, tremendous movement over the last few weeks. But how are we going to start here the quarter? Are we going to start with early rejection and then drop back down, or do we continue to stretch it? It's hard to see a stretch, a continuation, just because, again, the headline risk that we have, the inflationary pressures, signs pointing toward recession, things of that nature. So again, there is the potential to continue to see volatility, chop back and forth. So for example, if you were able to have seen or experienced a nice move here, you will likely want to take some profit off the table, or perhaps defend positions, or take something off and add back later, because there could be quite a pullback here that could be ahead. If, again, this thing has a failed new high tomorrow, we could see a turnaround Tuesday back to the midpoint, which could turn into a bearish outside day. So something strong like this could end up being, you know, being followed by a day like this. So again, if that happens tomorrow, we could see quite a flush back down on a short-term basis ahead. So again, not trying to not trying to be too bearish here. It's just after we've seen the good move down here, this is the more difficult area to engage now, because we got to kind of let it reset, do its thing here. If you enjoyed a move on, you know, enjoyed that move here, then again, be able to take something off the table, protect those positions in some way. But we'll see how it goes here. Yeah, it could absolutely turn into you know, kind of like you say, one of those boxes here at those highs. Again, in terms of this market structure right here, if we fail here at 4,600, 4,600 is going to be important tomorrow, or thereabouts, then we could theoretically stay kind of in this distribution right here. So it's just going to be tough to say how we go, because right at this moment we've stretched so much that any pullback could offer an opportunity to see some profit taken and you dump pretty quickly in that case. I would say that from a long-term perspective or overall, these rejections down here looked legit. It looked like it's punctuating the lows of the year. It happened at significant levels on the chart. So it would be nice to see a higher low develop here in April. Again, man, let's go back to the weekly chart real quickly here, and then I'll move on to the next one. Here's the weekly time frame. A couple of things you can see. Number one is that's your range right here. Let me take this off of log for now. So you have, 4,800 here. Right there, you got 4,600, and then over here, depending on where you're at, 4,100. You got other little levels that are kind of in there. But this is your level here where it tried to hold, it failed, it retested 2 weeks and dropped, and now here we are at it again. Last week, a rejection as it rallied through it, then dropped, and now early this week on a Monday, we're pulling back to the midpoint on a weekly bar. So a weekly bar is not completed on a Monday, it's completed on a Friday. So day one is up, day two could be a rejection of those highs and you're dropping, and all of a sudden by the end of the week you look very bearish and you're dropping down. So again, this midpoint is going to be very important by the end of the week. Where is price in relation to that midpoint? If we're above it, it could be indicative of some weakness. If we're below it, it could be quite bearish here heading into the rest of the week as we're off onto the right edge of this range. And nothing would surprise me in these market. Nothing would surprise me, not even this. And I continue to maintain since this day that if we were to test 4,000, that will be the next major bounce area right there. Quite a bit off of that zone right now, but again, just keeping you abreast of the levels to watch. Let's take a look at the NQ. The NQ also testing a tremendous area of resistance, the 15,250 level. 15,250 level's been tremendous. You can see it's basically that exact high right there has been the level, and for the most part this market here has been below that zone since the beginning of the year. Tried to hold, failed here, resistance, resistance, dropped on a lower high, resistance, and now we're coming back at it. This is where things are getting interesting again. When I talk about the ES having such a bullish rally over the last few weeks, the NQ was the best. For all the talk of tech stocks and underperforming here and there, a lot came to rally, and a lot rallied in big fashion. We'll take a look at some of these. But that was a new low on the year. A new low on the year. Failed new high with an outside day up and a big 2-bar day continuation and a major push higher thereafter. Again, an impulsive rally here, but no real clear top. We see this 8-period average come up to provide support, and now a change of bias on it. So the first test inside the Pima trigger zone being bought. So again, for the most part, you can see where this market could become very bullish, but also at the edge you can see where if this thing rejects here tomorrow, we could rally up here, see a rejection at the previous month's high, and then easily be back at the midpoint, or perhaps outside day. It could be one of these or one of these, and very soon we're back, say 14,478, or maybe we're at the midpoint of last month's range, 14,1, because that's what tends to happen when you fail at this level. So again, trying to temper expectations from a short-term perspective in that it may be rejection back down early tomorrow. If it does play out in that way, it could be an early failure for the next couple of weeks, and then from there it may try to pick it back up and see what happens. But overall, I do like the rejection we're seeing from these lows and that move. But as we continue to reiterate, bear market bounces tend to be the strongest. Look at that move here. Took no time at all. And other times you know, it takes quite a bit longer to achieve that type of move. This one was so vertical, so quick. So market structure 15.6 and above, and we're in 15.250. So this is a very important zone right here. Any rejection could dump this thing right back down. And if it dumps back down again, how far does it go? Good move here, but just something to be cautious about as we move forward. Now, looking at RTY. Actually, you know what? Let's look at YM, then I'll look at RTY in a moment. YM is different than the rest, and it's one of those cases that looks like an expanding wedge or expanding cone for the old school technical analysis crew right here. That expanding range right there. You got that 34.5 level. You got the zone below it, you got the zone above it, and then you have a great D-shaped profile with an HVN right near the middle. That's right the way you slice it up. We've known to keep an eye on the previous year's mid. 2 rejections here, and you're back at the mid quickly. Big bounce, bear market bounce. Then back to the mid again for some traps and another bounce. So, if there's room for optimism, it may not be this one, it may be RTY, so we'll finish on that one. But this one may lend itself to some optimism in that right now we are in the middle portion of this D shape, and anything can happen in here for a little while. But at the same time, we're off of these lows, and the good prices down here have been got, and now everybody's fighting up here. And when that happens, the tendency is for it to flow higher at some point. So perhaps it wouldn't surprise me if we come get a new high on a new year from that perspective, at which point it can get crushed again, and maybe we rotate again, because this is the D shape. So with respect to the YM here, we're right at the center of that range. There's basically absolutely zero edge to the YM right at this moment. It is almost as center of the range as you can get. Down here's the edge, you know, in this lower slice. Up here's the edge in this upper slice, and everything between here and here is just a lot of value area chop. So no edge in that one. But let's take a look at RTY before we move on out of the futures markets here. If there is cause for optimism, it's RTY. Really quickly, just to update, this right here is your impulsive low. It's when price dropped to that low, rallied, got to that high, rejected, and pulled back to the midpoint. So the midpoint is there, 22.25, and the high is up here, 23.66. 23.66, 22.25, and the low right here at 20.84.40. The low of the year is here. Rejected, 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 rejected. Look at those signals. Those are PivotBoss pivots signals at the previous year's low. That is a nice rejection signal as well. All three of those right at that point. And we've bounced. So we've traded in this lower portion below this key range. The one time we got above the key range, remember we were saying, uh-oh, if we get a failed new high and reject, and then we take out 23.66, it could lead us here, and then it could lead us here. Well, this is the same thing but flipped. We have all of this range-bound action. We've pushed higher, and we're trying to reclaim prices above 20.84.40, and if so, you go here with a shot to go here. So right now, oh, good question. Are these fiscal year bands? I changed these to yearly bands basically today. I had been using fiscal year bands up until today. The reason why is because we now have 3+ months, 3 months and plus. So switching to the yearly now is more than just quarterly, and I'll just build off of those developing levels. But I had been using US fiscal starting October over, but I did change those here today. So based on that change, you can see a compression of these bands, which means we could be looking at some expansion soon. So when I draw that level again, 2084.40 here, and you see the rejections on these lows and you see the move, obviously it failed here, at least initially, but you see the higher lows developing. Man, it is so close to taking this thing really big and making that move to 22.25. That is some cause for optimism. RTY. Again, perhaps that's too much to ask in a market like this, but when you analyze the market according to market structure, it's just the levels. The levels will tell us, and price acceptance or rejection will tell us. And right now, 2084.40 is the level to watch. 2100 is kind of the clean level to watch, and if the market takes a bid and stays above it, you have to start pointing to the next highest HVN above, and perhaps some overspill into the overvalued area of that D-shaped profile. So again, that's cause for optimism right there. I do like RTY, and again, if you're looking at it from kind of that weekly chart perspective here, if it does fail here, not only would we kind of drop to the bottom of the existing market structure, we may actually transition and trade in this lower. So that's why I think this is so important right now. You want to see it accept and start to push up toward this mid, even if it drops a bit afterwards, instead of failing, because this might actually put additional pressure and this may need to be traded. So just some thoughts from a higher time frame perspective, but this one doing good enough to look like it can make a transition. All right, speaking of transitions, let's take a look at some stocks that may be in a transition phase. I'm going to start with OLLI here today. This is one we saw earlier today, right out of the gate. One of the scans that we have that brought this one up was the modified Pima crossover scan, and you see how strong it was. I mean, right out of the gate, it was up big. We saw it up 8-9%. It's closed here at 1566. We were talking about it when it was around 848 here, and mentioned that in this scenario, when you get a big break, a gap like this and move, especially on positive headline risk, this was an upgrade from Wells Fargo to an overweight with a price target of 65. So that's why the big move. But when you see a big gap and run like this, and you see a breakout day, trend day scenario, transition day that transitions you from lower market structure to higher market structure, all those things, the in the money call tends to be one of the best ways to go. The in the money call is 45 strike. A bit earlier we talked about the May expiration for that one, and the 45 strike was at about 4 and change. It closed the day at 660, 6 and change, right out of the gate. But the idea here is that we may see a continuation higher over the next 1 to 2 weeks at the very least, which could take us to about $54. That's the next edge up. So basically you had this market structure, you had this lower, and today it's transitioning perhaps to that level. When you look at it from a larger perspective here, let's just go out to the weekly. You see a lot to like in the weekly chart as well. So you see that level right there is about 37, 38. This is the previous year's low right here. And then you had, again, the box, a box reversal. You had this box that formed below that zone, and now you're getting the big squeeze back up. And last time it did this, from those levels. Not sure we do that again. The time before that, it did this from those levels. Not sure we do that again. But anything can happen. I would say first things first, on the transition phase, holding the midpoint tomorrow would be big, but especially holding 45s, and you have a shot to overcome the previous year's close and start working your way up. And I could see a scenario here where the upper end of market structure could be around 70. 70 here. You're transitioning, basically trying to transition back above this point, the previous year's close, which would be about here, and then you move back up to about that edge right there. So that could be a tremendous move on a longer term basis if the transition phase here is real today. So a big time move. Again, I hesitate saying being too bullish here without a turnaround Tuesday potentially wrecking this entire idea. Ideally, you want to stay above that midpoint on a daily closing basis. Okay, let's take a look now at another potentially bullish transition phase, BLNK, blink charging. This is another one we've discussed here before. I'm in this one. You see a key range low here. That's 25 even. You see a key range high right here. That's 44 even. This thing has something for the evens. And right there you got 34 half as the midpoint. And that's a great key range. Great impulsive sell off down to a low to a mid, and you can see how price has responded to the edges or thereabouts. And recently here it did break down, rounded bottom, accumulation pattern here developing. I'm in from the pink line here at 2250, and the idea was to be in within the accumulation ahead of what could be a test at the edge. And now we've tested the edge. It actually consolidated right at the previous year's close, and today, big day up, 8.93% with a bullish Pima triggers, or rather a bullish modified Pima crossover signal right there. Big time transition day up. Exactly what you want to see. Can it hold? Can it hold? Or is tomorrow going to be a tremendous turnaround day where it closes back below 28 and then you see a huge trap and dump? If there's a huge trap and dump, it wouldn't surprise me if this thing retrades 20. 20's been a great long-term buy zone. We've had it on the chart for a while. I allowed it to go into there and see how it would respond. It held on a couple of passes, so I got in just above here. The reason I got 2250 is also it lines up with the ultimate upper end of the target range. So for example, this is the key range low, and we are transitioning back above that key range low. Any pullback, by the way, as deep as 25 could still be bought for 34 half and 44, and then you have a 45 entry right here, or 45 edge that has been in play each of the last 9 months of last year. That's an HVN there. So that would be a double if it were to get to there. That's the ultimate target from this year's kind of perspective. Can it get there? I don't know. We'll see. It has enough energy and accumulation to get it there. And we've seen this move before. Last time I called a rounded bottom accumulation was here, by the way. And that was the transition day, and it went 30 to 50. This one is a much better, well-defined accumulation. Much, much better. So if this can lead to that, I mean, can this one lead to a new high in the 50 zone? New high for this market structure. So again, perhaps that's wishful thinking, but this looks like a bullish transition day that we definitely want to pay attention to, because again, if we can stay above 28 here, it opens up some upside to at least 34 half. So even if you are somebody that wants to trade the short term target is this level right here, 34 half. The reason being this key range low. That key range low the reacceptance was here. It's continued higher. We could theoretically hit that key range low and still hit that midpoint. I see high odds for 34 half test, especially if we can stay above the breakout point here over the next several days. So again, that's a big if with a turnaround Tuesday potential tomorrow, but something to keep an eye on there. So that's another bullish transition day. Let's talk another transition day. Twitter was on the is on the buy list, but it's changed. The buy point has changed. This was we identified this one last week as one to discuss today for our monthly outlook. The reason being, we have a higher value relationship. You see the pivot range here? This month it developed higher and it closed above that pivot range. That is a higher value with a bullish confirming bias. We've had a downtrending market where these pivot ranges have been forming lower, lower, lower. That is an indication of a downward trending market. So to reject here, right there, that was your bullish transition day that broke this downtrend, at least in the short term, and you saw this thing rally. That also put you back above 36. So it was shortly after that when this thing pushed up, we mentioned, hey, any pullback to begin April could be a great buy opportunity as this thing looks to push through the previous year's low and work back up the range. So that was to be the analysis for today, and then news comes out that Tesla now owns a quote-unquote passive 9.2% stake in Twitter, which is, I believe, over $2 billion or 2 billion shares, something like that. So that's tremendous. A huge, what I would call, institutional gap, a pro gap. And the tendency after a pro gap like that would be for extension to the upside, especially if the low remains intact. Right now, a bracket trade could be in play, but for the most part, very bullish price action here. And if we can continue to see price staying above the previous low there, we could see 1 to 2 weeks of strength here up ahead. So again, this market's already done tremendous here from the 32 lows, hitting 52 here today or close to it. This one's a bit tougher now. I was gung-ho about it heading into today, and then I saw that it was going to open plus 20%, and that was huge. So holding off right now to see how we play out from here. But this one is interesting now, and I would say that any early pullback, if it holds the midpoint tomorrow, it could be an opportunity to get this thing going higher for the next 1 to 2 weeks. Perhaps a 57 half or maybe as high as 60 could be in play from that perspective. Again, a failure to hold the midpoint would be an early indication of rejection or failure at this moment for this one. Let's talk Unity real quickly here. We've had this one on the board for a little while, and I've had to be very patient with it. This is one, again, that depending on what you read or who you listen to, could be the next Apple, for example, for the next iteration of web and all the things they do and allow for with their platform. We've seen a lot of great movement out of this one. That again, look at this move here: 70 to 170, 80 to 210, and right now we're going 75 to 110 basically. Very quickly. This one has a tendency to move big time. I got in a hair early here at 80. There was a nice test at the 75 in the previous year's low. I didn't know if we get quite that low, but I did know that if, as I've mentioned since the very beginning here, that we're around value right now. If we can just make it below that gray line, I'd feel good about any entry below that gray line. and 80 was the entry for me. And the reason being is because I am compartmentalizing the range. So instead of looking at this entire thing and saying where has price been and what's it doing, this and this and that, for the most part, I'm looking at significant support. You're looking at undervalued relationship here against value. And ideally, what you'd like to see is a rejection of prices below value and a quick return to value, because you just now have bought something below and it's now at. And that's basically trading. The idea again is that you're looking at the 120 to 80 zone, and you're using this D-shaped profile to make decisions at the moment. So 80 was the entry here. We've since seen a very good move. I thought initially we could get a good bounce to value, as we did, but I didn't know if we could hold. I thought we might end up rotating and trying to rotate again back down. And instead, again, like some of these tech stocks here, we've seen quite a bit of strength. Not only that, you're seeing a couple of things happen here, and I can zoom in a bit more. You're seeing value go bid here, and then you're seeing VWAP here. This is currently yearly VWAP, year-to-date VWAP, and it's gone bid too, with a major stop run day up and another buy signal here. The other thing, lower value relationship, but with a bullish bias, and the first test into the pivot range bought for a new high. Again, that would be how you draw it up if you were drawing up a bullish change of direction here. So you've been trending down, trending down, trending down, trending down. Boom, you pull back and you explode to the upside. That's how you would change the trend moving forward. So there's a lot to like. This one's not really going much of anywhere until it can really get above 120. But 80 to 120 is a 50% gain. So I'll take it. Ideally here you want to see it, make its way back to break even on the year. So my goals are much higher. I'd like to see this thing go back to 143 and as high as the 160 market edge. So I have a long-term idea on this one, but at the same time, where this was, the rejection, where it was happening, was good for a short-term rotation. For those of you obviously in the trading room, obviously when you have the monthly outlooks, we're kind of stuck to the boundary of first trading day or two of the month. This one happened kind of mid-month, but again, great D-shaped profile, undervalued, back to value quickly, and now seeing signs of what could be a transition day, kind of like what we're seeing in Twitter and OLLI and BLNK. Very similar, but at the same time, will there be a turnaround Tuesday tomorrow? Is there a trap above 110 and it brings us back down? If that's the case, again, it wouldn't surprise me if we dropped as low as 90, and ideally you want to hold 90 in that case. So that's Unity right there. Again, very strong day today, 9.83% higher in this one. Another one here to keep an eye on is PLTR, that's Palantir. This one went the way of Twitter today. Not quite, but you could see a downtrending market, downtrending, downtrending, and here is your lower value. And at the same time that Twitter had that change of bias, so did Palantir. Weird, huh? I don't know. There's some correlation there, perhaps. Higher value relationship with a bullish bias. And so, again, last week, heading into this week, basically on these days here, we mentioned, man, this would be tremendous if price could drop into this pivot range. If it can hit 12, there's a great shot to return back to 17, 18. 18 being the high quality target. And then whenever price is ready to get above 18, you have a shot to reclaim value at 24.53. So $12 to 24 would be a double if it were to be able to make that happen. But even if not, the idea was 12 to 18. That's a plus 50%. As you can see, no pullback yet. So very strong. Again, look at this. It looks different than what we've seen here in the past. It looks more initiative. It looks more like it's changed market structure and is now working toward the next highest market structure. And so again, we could still see a pullback here, and if we do, I would say keep an eye on 12 bucks. If we at some point get that pullback we're talking about, 12 bucks could be a great entry for an 18 target, and down the way you may even see a move to 24 bucks, as that is the longer term HVN above. So think about this. You have a whole market over here that has traded all of last year with a value of 24.50. So anybody in right now at these prices is getting a much better value, and in many cases, once you're done going down, you will make the long arduous trip back up, and you will reclaim that value at some point down the road in many cases for these stocks that especially have been active and have a well-defined market structure. So again, this is one to keep an eye on. A pullback to 12 opens up 24 up ahead. One we talked about last time, or at least to begin the year rather, was Riot Blockchain. I have not made an entry on this one. I resent not making an entry yet. I'm not hurting by it yet. I've entered others instead. But this one, 15 bucks was our long-term buy zone, 15 bucks. It coincided with the previous year's low. And this is one of those ones, again, in this market, we weren't really looking to buy first tests. In many cases, we were trying to allow the market to test those zones and see how it held. And you can see multiple rotations here, here, all holding the $15 zone. This one got close here for me entering, again, entering other things during that time. But this was a great spot right there alongside the NQ rejection and other tech stocks that rejected that Tuesday morning. We've seen a bounce from 14 up to almost 24 over the course of a couple of weeks. That's a tremendous move. Again, you can see kind of this triangular type of move that happened here. Impulse move down with a bounce back. Perhaps that's a good key range here. But that's a strong move. Very strong move so far from the 15 zone. So if you had blindly just entered 15, it only went down a little bit, a point and a half before it bounced on numerous occasions. Is this enough to turn the tide on this one? A lot of times what we were looking for to begin the year was, let's see if we can get rejection here at the previous year's low or previous year's midpoint, and then we can return to the close. This one's made it back to the close now. Can it find a higher low and start to work through the close? That's what we're working on a lot of these, is can we now push through the previous year's close and work higher? If you're looking at this from a market structure edge perspective, 22, 23 here, and then you have the upper end at about 40. Again, this market structure can it get going back above here, because as soon as it can get above 23, 24, it opens up a path toward 40 up ahead for Riot. So those are several of the stocks here that we've talked about, new ones we've added, some we've entered already. A couple of newer ones here that are popping up here. PG, Procter Gamble, is one to keep an eye on. Again, a unique market, inflationary market. You know, a market where owning things is good, like crude oil, gold, real estate right now. PG, consumer staples, has had a tremendous bounce. You know, it dumped hard here. Previous year's high close rejected. Market structure breakdown, and then a major drop. And what is this level right here? I mean, you can set your clock by it sometimes, but that's the previous year's midpoint. Such a fine level. Big time bounce back up. And now, lower value relationship with a bullish bias, and the early pullback so far being defended. That's a good look right there. That higher low could open up a bit more strength. And if it can climb through 156, it opens up the upper end of the range here. This could be interesting here from a short-term perspective. So again, short-term, you want to see prices, at and below, 153 be bid for a push through 156 and higher. 160 could be a great short-term target up ahead, and then you may even see some flow to the upside. That's a short-term candidate to keep an eye on. Another short-term candidate here is UMPQ. This is one Dwayne mentioned a bit earlier in the trading room. A couple of reasons why this one is interesting, and you want to keep an eye on it as well. Number one, major rejection day, and that rejection day also coincides with yearly S3. So 3 standard deviations below value. Value currently at 2032. Is this thing still on log there? Okay, that's a weird. So 2032 up there. The other thing, the previous year's midpoint is here. We just saw that midpoint bounce right now in PG. That was perfect. This is another midpoint rejection. And then you look to the left and you also see kind of some visual support references as well. Just hit value. This is probably the one strike perhaps against this one would be that value is here. So it's not rejecting prices below value. It's not rejecting prices at an LVN because this is an HVN. But that doesn't mean it can't bounce. So this one is very unique. And again, keeping an eye on that 18, 15, 18 zone in general. If it can stay above that zone, there's a shot to bounce. The other reason I like this one is because the recent sell-off from that high at 20 bucks down to this low at 17.80 is an impulsive sell-off. And just by that very nature means that we could be bouncing back to the midpoint of that range very quickly. So not bad. I think the one knock again, we're at value right now. See VPOC there. And the secondary knock may be there's not a whole lot of meat on the bone. 18 to 22 is about as good as you can do, which is not bad. 4 points on 18 is not bad. But we've seen others do even better here. So some thoughts there on that one. Now, I wanted to bring up solar here. I'm going to come over here. I'm going to bring up the VT map. VT map right there. When I sort by the above category over here, EV automakers jumps to the top, crypto, athletic apparel, cruise lines, and this is a fluid list. One of the things you'll notice is solar. And solar, well, there's a lot of candidates here at the moment, but solar last time was one I mentioned that we could see a bounce heading into March because of how we finished February. We finished February so strong. Some of these came off S3, and this is a composite of every single solar chart, which is a lot right now. But you can see the net gain from the beginning of the year, or from the beginning of the month, is pretty good. The stocks we highlighted, there were several here, as you can see, a huge list, and they all bounce. So what we're looking at is, this March bounce, these bounces that happen here. Perhaps the best one again was the first one we talked about, and that's First Solar. First Solar had the tremendous start, and then the gap down, perhaps earnings there, but from that point went 65 to 85 back up. You can see here, this is a U.S. fiscal chart on the bands, and it had been outside S3 until it was able to push up, hit S2, pull back, higher low, and rally. So 70 to 85 just from that sequence. A very, very good move here out of First Solar. Another one that we mentioned was Enphase, and again, right over here, this was the big push up right away. We talked about it to begin the month here. It hit the pivot range on a couple of occasions and rallied tremendously. 150 to 216 was that one, so a big move up. And there's so many solar stocks, and not all of them are that great. Some are better than others, like with the ones we just looked at for solar and in phase. But there's also the ETF, right? Do we even have the ETF here? There's the solar ETF. You can see this one was up for the month as well. So again, that's one way to go without having to know every single stock. Another one we talked about as being bullish last month was ag chems. Agricultural chemicals could have a bullish month. Again, inflationary pressures and other things. And you can see here a very bullish month it was. Very volatile as well as a whole. This is a composite of several charts. If we drill down into those charts, again, some of the ones we mentioned, IPI. Look at this start to the month here. I mean, it was a huge month up. We're talking 55 to 90 and a wild swing in the middle, which was wild. Another one we talked about was Mosaic. And again, just a tremendous rally here to begin the month. That one also 50 something to 70, very bullish there. And NTR, I believe I discussed NTR last time as well. And look at the move here that we've seen out of that one, rallying 85 to 107s. So tremendous strength out of the agricultural chemicals. We did not mention Scott's, by the way, and look at that trending down. But everything else really did well. And again, sometimes that group rotation kind of rotates to the top and it says, hey, we're something to look at. And those did quite well. One of the things that you want to look at right now might be trucking. I had it up just a moment ago. If we go to the downside here, it's the one that pops up to the very top. And you can see with regards to trucking, a very sharp top here in JB Hunt and a huge drop. Lower high rather here at a market structure edge for Landstar, big drop through support. Over here, Old Dominion, major market structure edge, drop down, new lows. And then this one, Werner, has been trending down one and gave up S3. So they look very bad. They look very bad. And if trucking looks bad, what does that mean for the economy? And many times you can look at the Dow Jones Transport Index and get a good thumb of how the economy might be doing at a glance. IYT might be an early indication here of what to look for from that perspective as well. That's the transportation ETF, and you can see right here the last several days has dropped away from the previous year's close. So to begin the year, narrow range rejection failure at the previous year's close, and it dropped to the previous year's midpoint. Again, here's the previous year's midpoint coming into play like a beauty, 247.60. But the next retest we got at the previous year's close when it went break even was this. And many times IYT can be seen as a leading indicator to the market, so that may mean that the market might actually start to drop behind this weakness. So those are some things to kind of consider here. But with these drops, it's going to be very interesting to see how much more weakness we see out of them. Because you can see that there's some major market structure failures here. Just looking at JBHT, this break here opens up 160. This break here opens up 120. This is not a break yet, but you would be looking at a 250-ish. And this one already broke, and 35 might be next. So when you're failing at market structure like this, if you can't get back above that point, man, there's some more downside. And this was a huge trap at the upper end. This was a very clean market structure move down. This over here, another clean market structure move down. And this very clean range breaking to the downside. So this might be an indication of major weakness to come, or it could be one big dump phase before they reset and rally again. Overall, this has been very bullish industry group, and we are now approaching S3 or exceeding S3. So here we're at it, here we're below it, and we're approaching in these two right here. So, you know, whenever you have a bullish trending market and you hit S3, it's a rare blissful moment because you tend to see that follow. So this is going to be a group to watch moving forward, as it could have implications for the broader market. S3 rejection here is going to be important. We have an impulse sell-off. We just need to see where does that impulsive low come into play. That could be very good up ahead. So trucking going to be one to watch here moving forward. And I wanted to also take a look here at Adobe. I know that was mentioned here a moment ago. So let's take a look at Adobe. Here's Adobe. So here's the long form chart right now. Big, tremendous pullback. Super rally last year. Incredible how that happens. But here's last year's low, major edge, and then rallies through the top. Big push up all the way up to here to the high of the year. And then it goes all the way and wipes out those gains back down. That's how a market tends to go at times. This range right here is very important, and we held the edge. That range is rather wide, so at times instead of trading the whole range, it can compartmentalize some of the trading. So from 520 to 420, that's your range, and then you have 480 in the middle. So you compartmentalize it some here, transition, compartmentalize it some here. You're looking for the next transition above 480. Above 480 opens up 520, and then you're back in here a bit, and maybe still messing around. So you're clearly within this range, and you've done enough trading in the 420 to 580 zone that a transition could happen. It could happen, but it's kind of in a show me state right now. You can clearly see some good tendencies here, holding the previous year's low here, here at the LVN. But still, there's a market structure edge, just a 480 edge. It's also value, composite value here for the year so far. So, can it get above 480? If it gets above 480, 540 could be in play, 520 and above 540 in that zone. That's a good zone up there. 420 to 480, and then you have your upper zone here. So those are some thoughts here. Again, lower value relationship with a bullish close, so it could pull back to 440 and still kind of hold and try to push through. I like the potential here. We still have a very clear downward trend, but anytime you're testing the previous year's low, it's a good spot to look for rejection and start working higher off that area. So can it get above 480? That's going to be the major thing there. All right, let's take a look here. Okay. Oh, semiconductors. So Nvidia, one to watch here, obviously a leader in the group. Man, this is one long term I still think is a great one long term. Short term, again, is it going to succumb to supply chain issues and other things? Is it going to fail at that edge and stay inside this range? You know, the way that it's moved up here and kind of failing a little bit, I wonder if we make a move back down again. You know, this one's kind of mirroring the NQ, the ES, some of these other ones at the moment. I still like it longer term. So we began the year, our very first monthly outlook of the year said, if price pulls back to this midpoint, a trap at or below it might be the best entry of the year for Nvidia. And so far that's been the case here, and we've moved off that level. So is the low in? Are we now in this range for a while? It may just be a digestive year here, with the low end of the range being about where we called it there. So again, we're at the difficult edge of the range here, where we just had a great rejection. We saw it in so many different things, and then it's rallied, and now we're at the opposite edge where it's like, you know what, this looks a little expensive to buy it, maybe a pullback. We'll see how it goes from there. But this one, I could see it continuing to be mostly range bound with an upward bias at some point, and prices below 230 still an opportunity to buy for a longer term entry. You look at something like AMD. This one's been down below the previous year's midpoint, not quite as good from that perspective, and below value, and inside this triangular range. So not the best from that perspective. AMAT is another one here, holding above the midpoint, traps at and below the midpoint still in play, but there's some market structure that's been really rough here, and this counter edge has been tough, and then that's the edge that really needs to be broken through so we can get into this upper box, and we can't. So you know, some of these still look like they might need more time in the range, more rotation. This one falls in that category as well. Coin. So Coinbase, which is a good transition there, RC. Coinbase, initially, you know, I nearly got into this one a couple of times in this zone here. That's the long-term buy zone that I had initially picked out when this thing kept dropping. And it reacted really well in here. It held. There was a couple good times where it was up, but you know, it's continued to bounce. You know, one thing I'll talk about often is the wide PivotBoss pivots, or a wide pivot range, range in the previous session of time. And when you have that, the 25% level is almost a perfect ambush level at times, and so far that's been the perfect level. It's a 152.62. It's basically the 25% expansion from the previous year's range. And when it's a wide previous year's range, or previous day's range, previous week, previous month, whatever period of time, the 25% level can be the best fade. So that came true. It's only traded that level 2 days and then bounced right back to the low. This is another one of those markets that again is trading fully below prior market structure in a range that is very well developed, and at some point I can see a transition back above and across the range. The frustrating part is that when will that happen? Because we could stay in this range for the foreseeable future. We could even continue to make new lows here. But the day we get that transition back above 208, though, it opens up a move to 280 very quickly, just based on market structure. We do have a lower value with a bullish change of bias. It's not the strongest. It's more, I think, a result of the trading range environment here. So from a short-term perspective, this is the range, 150 to 210. And you're going to be trading 180 to 210 for a little while. You might trade down here between 150 and 180. As soon as you're able to get above 210, it opens up that next 70 handles up above. You know, when it comes to one like this, again, I would love to see a huge flush and then a recovery by the end of the day and get yourself a major higher low, failed new low type of rejection, that would be tremendous for a lot of these stocks. That's coin. So this is a good segue here because coins had a good bounce. 150 to 208 is not bad. This one is a market disruptor. So, you know, at times market disruptor stocks are punished at first. You see Coinbase getting punished. You see something like Robinhood get punished, and rightfully so. At some point, this one may bounce, but again, those disruptors tend to get punished, and once they're done getting punished, and those folks who they disrupted can get their entries and get their accumulation, that's when it'll start to make its move. Which, by the way, look at this one right here. I didn't mean to talk about this one right now, but this one has value shifted downward to 1383, way down here. It's a much bigger value point of control than the 35 level up above. And 35 might be a snapback level sometime down the road on this one. Again, not one I'd jump into just yet. But again, market disruptors can tend to be very beat down until proven otherwise. So let's make the quick shift here to crypto for a moment. Bitcoin has been quite bullish. A few points on Bitcoin. Rounded bottom accumulation pattern, and trying to stay above the previous year's close now, and testing that higher value relationship here early this month. A couple of buy signals coming into play. It has the look and feel of something that could do that very quickly. 52,000 would be next, and then 55K is after that. You know, first things first, I'm not trying to say that this thing's going to go way up here just yet, although my entry on this pullback is 37.5, and that 37.5 entry is based off of the potential to go 75K at some point by the end of the year or early next year. I would, you know, not saying I would love for it to drop back down here against my position, but at the same time, if we were to drop lower, I would love to add back tremendously. I don't have nearly enough Bitcoin here, so but the entry was great, with the potential again to continue higher in the short term toward 52K and 55K. Once we get to 55K, if we were to get there sooner than later, we might be in a new normal between 46 and 55, where we're trading kind of in this range ahead of what could be a continuation beyond that. So, you know, again, one thing I will mention with regards to Bitcoin is that while the market was getting crushed, while the market was dropping, and tech stocks were getting punished in Q1, sure, there was a little bit of selling pressure here early, but once that initial shakeout happened, we never came back to that January low. It has been higher lows. It has been compression and digestion in the face of a broader market that has been getting its butt kicked. We've noted that in the trading room many occasions, how bullish that is and how it could lead a recovery at some point sooner than later. So that's really, really solid. The other thing you'll notice here is this entire accumulation here looks very reminiscent of maybe this over here, or even this smaller piece here, once we got above 28K. Once we got above 28K, those pullbacks have been staunchly defended. And ultimately, when you think it's about to break down, is just when it pushes up and transitions. One of those levels has been 42,500. 42,500. So 42.5 is now my new kind of pivot in the chart. It was the pivot to begin with. Coming into the level, I downward adjusted a little bit and said, hey, you know, if now 40,000 might be the level that we're watching here, but really that 42, here's 40,000 for reference, but 42.5 big time level, and it's through it, trying to hold it from a short-term perspective. If it can hold that zone on any pullback here, we might be off to the races to, again, 52 and 55 up above. Over the course of time here, again, expecting a push to 70 to 75, which would be the upper end of that range. So again, longer term idea to 75, 70, 75, but the short term idea was getting in here and allowing it to return higher and see if it can overcome the previous year's close. So looking very solid here. Again, I'm trying to temper expectations here, but this rounded bottom with a great follow through and an attempt to hold right now, it looks the part for a swift move to 52 up ahead. So even if you're short-term swing trading this one, 46 to 52 could be a plus $6,000 up ahead toward that target. Very high probability target over the course of the next 1 to 2 weeks. So continuing to watch this one. Perhaps the best of breed at the moment is Ethereum. This one has been so strong. Hit a new high already here today. The high right there at 36K. Just think this thing has rallied 3600. This hit 2500 and rallied to 3600 over the last few weeks. Tremendous move. Nice triangle compression pattern here. Initially, this high to that low gave us this impulsive move and this key range. So we've talked about this key range for a while, and we noted initially that the key range gives us two upside targets, 40.41 and 46.69. This high right here is the 34.13s. So these are the next two major targets above based off of this impulsive move and based on that compression. Look at the strength. Look at the move we've seen so far. Again, in the face of so much weakness in Q1 across so many different stocks and industry groups, Ethereum, Bitcoin holding, not only holding, but also advancing. That's a tremendous percentage gain, 40 to 50%. And it's not alone in that space. Now, will there be some sort of trap and big drop? There could be. There certainly could be. I'm in on this one at 27.5 on this recent pullback here and looking to see if we can make it up toward 5,500 again down the way. That's a long-term entry, but it's also based off this key range here. Great trap there. Almost got to it here. 5,500 is the 50% extension. So again, looking to see if we can make it there from a long-term perspective, but looking to add to this position. Again, was hopeful that we might see a little bit more weakness to really add to it, but we didn't. So glad I got in where I got in. But at the same time, if this is going to start trending up, I'd love to see some potential to add to this position, perhaps 3,000. For a push higher. So again, this could be tremendous if it can see a defense on the next pullback for a continuation higher. So Bitcoin, Ethereum have been tremendous in their strength. Others that we've talked about before, one of the ones I really liked was Sol. So again, several of the ones we mentioned to begin the year here, Solana is one of them, bringing it up over here. One thing you'll see with Solana is when you look at it from a long-term perspective, when we looked at this one in January, we had this is the market structure edge, and then we had the top end of the market structure, you know, somewhere in there. And we mentioned, okay, well, if we can let, you know, we've been dropping, let price break through the market structure lows and then look to trap somewhere in here. And the entry I gave at the time was 90 to 100, and that could be an opportunity to trap and then return this thing back up at some point when it's able to reclaim those prices. The first bounce did not reclaim and it dropped. This was a great lower low off the $80 level. This was a great compression off 80 and it exploded to 140 plus. So 80 to 140, right? That's like a 60 something 70-something% gain, 75% gain. Big time move. 80 to 160 would be your double, and again, that right there is a 3-week move. That's how bullish this has been. And again, I'm in off the 100 level. But the level here to hold on a pullback is between 110 and 120. So if you don't have a position in this one, there's the 120 level right there. Here's the market structure below it. It is now pushed back above that level, back above these lows here. And on a pullback here, if it can hold that pullback, there's a shot to shoot higher and get that 180 level and start working perhaps up the range. This is one long term, again, another one that kind of competes in the Ethereum space there and could be tremendous down the way. But another one that, based on market structure and based on the potential to break through those lows, being patient and allowing it to do its thing, and then now looking at this recover, it's a tremendous move on underway, with the potential to continue higher. It really looks like it could continue to explode. It would not surprise me if we see 180 down the way, if it can continue to hold the 110 to 120 zone on this pullback. So Solana, again, I'm in on that one after the pullback here, and now looking to see how far this one can go. Not gonna lie, I'd love to add to this one as well. So if price does pull back and give us a great rejection here, that could be an add back for me just to get in for the next push higher. The other one here would be Avalanche. That's one that I mentioned as well as a buy opportunity to begin the year. And I mentioned I wouldn't be looking at every single coin. My goal was to look at coins that could be could have significant growth and have tremendous utility already in the market, and many other factors. Coins that are either building on top of Ethereum or competing with Ethereum and things of that nature. Or if your name is Bitcoin or Ethereum, then you're good to go. But I wasn't going to look at everything. We're just going to look at several of the ones that look like they could continue to grow. Avalanche was one of those names. And with Avalanche here, initially we're looking at this market structure right there. Maybe a bit lower here, right there. 75 basically to 65 was the entry. So we mentioned that if we were to break down here, somewhere between 65 and 75 could be a great entry. And then once price is able to reestablish acceptance back above 75, there's a shot to work your way up the range. 100 would be next, and then after that, excuse me, 130 would be after that next. And after 100, again, 130 could be up here. So you've seen how this thing is played out. I barely missed 65. I watched it here, and once it was able to recover, I did enter my 65 entry, and I barely missed by pennies. And it got a move. So the next time it came back down, I went ahead and got in 74s. And so I'm in that 74 here. Again, 65 to 75 was the zone we talked about because it was below this edge. And if we can get in below the edge, at some point it would find acceptance above that edge and move back up the way. So we've gotten a 75 to 100 move. A great percentage gain, 33% on that one right there. And the potential to now extend this is there. Again, we'll have to see how bullish we start April, because it wouldn't surprise me if we drop back within the range and kind of stay in here for a bit before it can transition. But above 100 opens up the 130 market structure up ahead. So this one's been good based off of our initial analysis to begin the year, and continues to work its way higher. Another one here that I wanted to discuss, and some of you in the trading room have heard this quite a bit here, but I've been very impressed with the amount of great movement and the percentage gains and the market structure, adhering to market structure, and all those various things, it's been very impressive to see how the crypto market has performed in the face of all the headline risk and uncertainties we're seeing right now, in the face of so much weakness in the broader market in certain spaces. This has been very, very good to see. Zcash is one that held 80 bucks, and you can see going back, 80 bucks has been tremendous. This recent hold at 80 bucks was nice, and anything below 100 tends to be primo entries, and the tendency would be to rally quickly back to 175, and then above 175 you open it up. This thing actually went to about 220, a huge move that over the course of the last 5 weeks or so, this thing has gone from 80 to about 220 bucks, more than doubling. But these are daily bars, and look at this rejection here off the $80 level. Look at the retest here. This is the day I put in my 100 entry, and I barely missed it by pennies. My entry stayed in, and then it missed it by $3 there, and then it went to about 206 this day, or whenever it was, 200 plus, and I took off my entry. So I got left behind in this one, but it remains a very, very good mover, and it remains one that I believe can continue to produce, and even if it's from a short-term perspective. So I've seen these become very, very good swing trading vehicles here over the last quarter. I've engaged those moves, and again, they've been very, very fluid markets, especially again the ones that we've talked about. I'm not talking every coin out there, but very, very fluid. One of the things I like about today, a strong wipeout phase at a market structure edge. Zcash might be a short-term buy for a rotation higher here. Again, short-term buy for a rotation higher to retest. Again, this is ridiculous percentage gains, but again, let's be clear. I'm not also line item looking at every single thing these are doing. I don't know all of the stats behind, AVAX versus Solana versus ETH versus some of these other ones, but we do know price action. We do know market structure and how to manage positions here. And when you see a tremendous rejection at an edge, that's an opportunity to fade it back toward the next edge, and this one did that in spades. So trying to be a little bit more patient on this one again, but this is one to continue to watch as a very active coin here. Yeah, that's a great question there, Daniel. While transports may be an early indication of slower economic growth and may lead markets lower, how would that affect your bias on growth crypto coins? That's a great question right now. A lot of this at the moment, it's very .com-ish, and depending on when you were born or when you started trading. I mean, some of you lived it, some of you learned about it later, but it's very .com-ish. So that's why I'm being more careful on which ones I'm entering and where. I've held off for a while overall, and especially since the November highs, to allow some of these coins and some of these crazy prices to pull back to a respectable level where responsive buyers can come in and push this thing back up as market participants. And again, just kind of basing it off those principles instead of everything else. And from this chart again, the movement we've seen in some of these growth coins have been great. Now, whether they can sustain it, that's a whole nother thing. We've seen tremendous cycles of growth and crashes in all of these coins. So that's why, again, I would continue to caution that my biggest monies are going into Ethereum and Bitcoin, and all of the smaller coins that I have are all getting an allotment that I am comfortable having in there. Basically, for a lot of these smaller coins, I'm putting an amount that I can sleep at night with, and if they pull back or go to zero, I'm fine with. But if they don't and they continue higher the way we think they can, they're already producing at a clip that's anywhere between 35 and 60% gains so far for a lot of these. It's been really nice. So again, I don't think every coin works out, and one of the things I use Coinbase Pro. There's many different other ways that you can engage these crypto markets and other outlets out there that you can do it. I kind of like the fact that Coinbase Pro doesn't allow me to trade every single coin out there, but it is also kind of frustrating that I can't trade certain coins. BNB and some of these other ones that are newer, tend to be very good active movers, but at the same time, I don't have access, for at least from this account. But one of the ones here, Luna, is one that again I have kind of an ETF approach, W Luna in Coinbase Pro, but this is one that has been very bullish as well recently, and the way that this one has moved has been tremendous mover lately. This is a metaverse play, Terra, and again I got left behind in this one. I didn't even have an order in whenever it got that big move. So I'm looking to see where that secondary entry would be. At the moment, I don't want to overdo it here, but this one looks like one that could continue to grow. So if you're looking at some to look at, Terra is a good one. ADA, Cardano, is one that has moved really nicely off the 18 cent or 80 cent level rather, and has moved 50% just in the last couple of weeks. So right here at 80 cents it was coiling up, and here recently rallying to 120. That's a big time move right out of the gate. Again, this is looking like an opportunity where the next shakeout could provide a tremendous continuation higher, where this thing could be going to 160. 160 would be the next target above. Based on that market structure there, you see the $80 is here, so that would be a double here. But kind of coming back to a buck might be able to get you in for the next continuation move up. So on some of these, again, great moves here recently. Gotten into some of these here, but at the same time trying to line up where the next pullback entry could be for some of these, and especially for some of the ones I missed out on. XLM would be another one that if you're looking for another coin to take a look at, this one would be one that again has rallied really nicely here recently off the 18 cent level. This one is 18 cents, 17.5 cents, and went to 24 very quickly. That's a good spot, 18 cents. When we initially talked about this one to begin the year, we had a 20-cent starting entry here. So you can see 20 cents right there, and that's the lower end of the range. 40 cents is here, 45 a little bit higher. So 20 cents or better was going to be a great spot for this one, and so far looking good. Now if you pull back to 20, that could be the re-entry for a move across the range down the way to 40. That's the way to go for this one, is seeing how it responds to a retest of 20 cents. We could be looking at a move across the range. So again, that's Stellar XLM with the potential to move higher. So a ton of great looking cryptos here that have done well here recently. There's plenty of others as well, and Decentraland is another one that looks good. Algorand continues to look good. QTUM we had as a buy between 5 and 6 to begin the year. This is not one that I have entered, but one of the things we did mention regarding this one was the $5 to $6 zone, and if it hit that area, so here's the beginning of the year, if it got into that zone, which it was before, we might see a lift off that area toward 10 bucks. And that's already kind of played out. So again, a tremendous move out of this one to rally, literally from $5 and then come within a hair of $10 and doubling very, very quickly just from the end of February. These pullbacks to 550 were great. So this one might be another one that, again, on the pullback here might be ready to continue higher. But we've identified some good ones with some good levels here so far. Again, I'm really liking the type of price action we're seeing in the crypto space. In some of these names like we discussed here today, the volatility's been good, the movement's been good, the price action's been great, and the percentage gains are right there. Meanwhile, got to be careful on the stock side of things. A lot of violent moves we've been seeing here lately, and if we can continue to hold on this next pullback, things could be tremendous from a broader market perspective. So again, as we head into the rest of the month here, we're going to see how the market responds early on in April. If we can get ourselves a nice pullback here that holds, it could be bullish, but it wouldn't surprise me if we get a little bit more weakness to come. On that weakness, there could be additional entries to be had. So a lot of different charts we caught up with here today. Again, thank you all very much for all of the various charts you asked me to look at. We'll be back at it again in the trading room here tomorrow morning. For those of you that want to learn more about our trading room, you can go to pivotboss.ecofin.com and join the room there and check it out. We've got a lot of great things there, from the 10-part executive training series to our signature setup series, our boot camps, all the various tools at your disposal as well, and a lot of great traders in the room. Again, thank you all very much for joining me here for the April 2022 edition of the Monthly Market Outlook, and we'll be back at it again soon. Take care, everybody, and I'll get the recording out as soon as possible. See you soon.